Hello people, so let's continue our marathon discussion further. The next standard we'll be taking is Accounting Standard 28 that talks about impairment of assets. Again, it's an extension standard of AS 10 and 26. The background behind this standard is the whole intention of AS 28 is to make sure that asset is not overvalued. Asset should not be overvalued. That is a primary intention of Accounting Standard 28. There is a concept here called impairment loss. There is only one concept here called impairment loss. There is no impairment gain. There is only impairment loss. Okay. Now, this particular standard applies to all assets except few things like here inventory car treatment is recommended by AS2. Assets which are coming as part of construction contract, AS7 talks about it. For financial assets, we had AS 30, 31, 32. It's been withdrawn. You'll learn this as in AS 109 in CA final. It's out of syllabus for you for the time being. Deferred tax asset AS 22 covers. So there are some assets which are governed by other standards. So AS 28 will not apply to them. Or if you want it in one simple quick way, AS 28 we primarily apply for property, plant and equipment and intangible assets. AS 28 applicability will be predominantly on these two assets. Okay, there's one more called investment property which you'll learn in Ind AS 40 in CA final, again out of syllabus for us. Okay, for Inter, I think these two are good enough. Okay, G. Again, what was the primary intention again? To make sure assets are not overvalued. That's the overview. Okay. Now, excuse me. Sir, as I told you, this particular AS 28 brings out a concept called IL. IL as in impairment loss. Impairment loss. This impairment loss will only come in one and only one scenario. One and only one scenario. If carrying amount, if it is greater than recoverable amount. If carrying amount, if it is greater than recoverable amount, then only you will get something called impairment loss. Otherwise, impairment loss will never come into picture. Carrying amount greater than recoverable amount. I think you know what is carrying amount, right? Book value, whatever you want to call it. This will be available from your books. Okay, ledger accounts will give you the balance. The only thing that we need to have awareness about is on recoverable amount. Name itself is throwing a lot of things. Recoverable amount. Sir, if you have an asset, there are two ways through which you can recover. Can you help me with that? If you have an asset, like let's say I have an iPad, and there are two ways through which I've invested money in iPad. There are two ways through which I can recover this investment. What are those? Either sell it or I use it. Use it and generate benefit so that I can recover my investment, or sell it and recover my investment. Yes or no? That's all is recoverable amount. Recoverable amount is higher of two things. By using it, how much money you will get. By selling it, how much money you will get. The higher of the two becomes your recoverable. There's some things about that. We'll talk about it in a bit. But in a nutshell, is this okay? Yes. So you compare that carrying amount with recoverable amount only if carrying amount. Suppose carrying amount of one machinery is 1 lakh. Recoverable amount, let's say, is only 80,000. Assumption. Or I think here only it is there. Carrying amount is 1 lakh. Recoverable amount is 80,000. Is carrying amount greater than recoverable amount? Yes. By how much? 20,000. So that 20,000 will be booked as what? Impairment loss. Because here this asset has got overstated. Do you agree with me? This asset has got overstated by 20. Do you agree? Yes. How? Sorry, currently you are showing the asset at 1 lakh. But max to max, either by using or by selling, by max to max, you can recover only how much? From that asset, maximum you can recover 80, but in your books you are showing 1 lakh. So are you not overstating? Yes. By how much? 20. That overstated amount only will be booked something as impairment loss. That's all this concept. Okay, Naji? Again, what are the two ways to recover the money again? One by using, one by selling. Yes. Sir, selling price is constant. Selling price means the amount recovered when you sell a particular asset in the market. Or in a way, can I say market price? Market price every day will remain same. Today I may sell it for 80. Tomorrow I may sell it for 75. After 1 month it could be different. Right? So if market price is fluctuating, recoverable amount also will fluctuate, because how do you find recoverable amount? By comparing two things: market price, one by selling, that is market price, and one by using, right? These two you compare and take the higher amount. If market value goes on fluctuating, recoverable amount also will go on fluctuating. That means every day I have to check impairment loss, because this value, this RA will go on fluctuating, because it is driven by market price. So since RA fluctuates every day, so now the question was raised, every day should the company check for impairment loss? Is it possible? We have only one asset, so it's not possible, right? Hence they brought in a concept called, you do this impairment ka checking activity. You do this impairment check only if there is something called impairment indicator. Only if impairment indicator comes into picture, then only you do something called impairment check by finding what? Recoverable. If this indicator has not come, means no need to find recoverable amount, no need to book impairment loss. All this drama will come into picture only if there is something called what, sir? Indicator or impairment indicator. Now, impairment indicator are of two types: internal, external. Internal indicator, external indicator. First, maybe we'll run through some. I've just listed out some examples. There could be more indicators also. The list is not exhaustive. It is just an illustrative or just for the sake of examples. External indicators means outside the company's influence. Outside company influence. Like, let's say the country is in a recession. Country is in a recession. When that is the environment, the price of all assets, market price of all assets will be on the higher side or lower side. So if there is any reduction in the market price of an asset due to recession or whatever, that could be taken as what? External impairment indicator. One reason. Okay. Or adverse changes in technology, law, etc., etc. Like, let's say I have a machinery through which I used to produce some plastic bags. You have plastic bags. I had a machinery through which I used to produce plastic bags. Few years back, they brought in some micron concept. Plastic bags, plastic cover beyond a certain microns is banned. Only if it reaches a certain microns, we will allow you to produce, because it was causing a lot of global warming and other, decomposition issues. So, are you aware of it? Okay. So now let us say I was using this machinery and producing some plastic covers. And such plastic covers are now banned by the government. I cannot produce that plastic cover because it's causing some harm to the environment and government has banned it. Now you tell me, can I use my asset fully or I have to reduce its usage? If I reduce asset ka usage, will I get same benefit or less benefit? So that is your impairment indicator. Because it is a favorable change or adverse change. Adverse change in what? Law. Like this, there could be some unfavorable or adverse changes in technology, etc., etc. So they can be taken as what, sir? External indicator. The moment indicator comes, you have to find something called what, sir? Recoverable. You don't have to book impairment loss. Indicator, when it comes, you have to find what? Recoverable. Then compare that carrying amount with recoverable amount. Only if carrying amount, if it is greater than recoverable amount, you will book what? Impairment loss. That's the whole structure. Okay. First indicator, then what? Recoverable amount, and then if need be, you will book impairment loss. Similarly, you could have some internal impairment indicator also. Like, let's say, sir, my asset has got damaged. Josh, mein this iPad fell off. Yeah, right. Josh, mein this iPad fell off. Now, can I use this iPad to the same extent or its usage will get reduced? So that is what? Now, am I dependent on outside the factor or this is a within the company factor? This becomes what? Your internal impairment indicator. So any damage, physical damage to the asset could be an internal impairment indicator. Or if you have changed the usage pattern of the asset. Yes, in my case only. Earlier, I used to use this iPad for easily 8 to 9 hours because I used to take double batches. Now my Kanta, Throto is not permitting. Now only 4 hours. Bangalore may also I take only one batch. Rest all the batch our Akhilesh sir is taking. Yeah, right now. So he is our guru. Okay. Yeah, just say yes. So that way. So what now? Now if I'm taking only one batch, I'm using this asset only for 4 hours. So if there is any change in the usage pattern of the asset, if I have reduced the usage of the asset, that could also be taken as an impairment indicator. Okay, people. So these are all some of the examples of indicators. So when they come, you have to find what? Recoverable amount and then book impairment loss if and if only if it is required. Proceed or processing time? Processing time. Proceed. They're like, hey, let him finish. Otherwise 3 o'clock he will do. Okay. Now people, fine. Okay, let's take this scenario. Carrying amount how much? 1 lakh. Recoverable amount how much? 80,000. Will you book impairment loss? Yes. Why? Carrying amount is greater than recoverable. How much impairment loss you'll have to book? 20,000. Done now. Journal entry for impairment loss is same as depreciation or amortization. You know this. Tell me. What is the entry for depreciation? Depreciation to PP. Right? Now substitute depreciation with impairment loss and tell me the entry. Impairment loss account debit to PP. If PP is getting impaired, you will credit PP. If intangible asset is getting impaired, credit. This is the first journal entry. Any problem? No. Now impairment loss is also a loss. Where will you transfer the loss to? P&L. But here there is, hang on. What AS 28 says is, impairment loss you book. But first, don't directly transfer impairment loss to P&L. First check if this asset which got impaired, if this asset which got impaired has RR. Has a RR. What is RR? Revaluation risk. If this asset which got impaired, if it has RR, first you will adjust the impairment loss with the RR. If there is a shortage, then you will transfer it where? P&L. Or if RR is not there, then entire impairment loss goes to P&L. So the entry depends on the existence or amount of RR. That's it. A revaluation reserve, not RR. RR for this asset which got impaired. Okay, so you'll have to check that. You'll have to maintain and accordingly adjust. That's it. So second entry will be this. Impairment loss, you'll not straight away transfer to P&L. You'll write RR debit first. Suppose you have 15,000 in RR. Complete the entry for me. In this example, impairment loss is 20. RR is only 15. What do you do? RR debit 15. SPL or P&L account debit 5. To credit impairment loss 20. That is what I've written here. Fine. Okay, next one then. Now people, RA as in recoverable amount. Recoverable amount, I told there are 2 ways to recover from an asset. One by using, another by selling. So which one you will do? You will compare the two and take the higher of the two. That sellable amount, no, we here in AS 28 terminology, we call it as net selling price. By selling, how much money you will get, that we call it as net selling price. By using the asset, how much benefit you will get, we call it as VIU, value in use. Just the terminology, meaning is same. This is the benefit from using, this is the benefit from selling. Just the terminology called out as net selling price and value in use. Now there's some things you need to consider for finding these. I'll just tell you exam related points. I'll not deep dive too much into this. May not be that much exam relevant. Okay. Sir, how do you get net selling price? Name itself is saying net selling price. It is not selling price. It is net selling price. So what is this? Sir, when you sell a particular asset, whatever it is, you may incur some selling expense also. So if you have any selling expense, that we call it as cost of disposal, reduce that. From the selling price, from the sale value, reduce your selling expense. That final number we call it as NSP, as in net selling price. That you'll have to take for this RA ka determination. Okay, Ji. Alright. Next, that selling expense is there, no? Don't take finance cost as a selling expense. Don't take finance cost as a selling expense, as well as income tax expense also. Don't take it as a selling expense. One, sir, when you take a finance, right? When you take a finance, is it just for that asset or it's for the business as a whole? Business as a whole. When you take money, when you borrow debentures, when you issue equity shares, it is for one asset or overall business? Overall business. Are we doing here what? Impairment of a particular asset. So since that finance cost may not be necessarily related to a particular asset, the standard has taken a thumb rule that finance cost don't consider it as a expense for NSP determination. Okay, so that selling expense will exclude your finance cost, and your income tax expense also is not considered as a selling expense. It should not be considered for this purpose. Fine, that's all we're doing. Because income tax also you pay on a specific asset or overall business profit. Overall business profit. This is not related to a specific asset, rather a business as a whole. So these two components are excluded from your selling expense calculation. The normal selling expense like your salesman's commission, all that can be considered. But these two are excluded. Fine, people. Preference is okay. Done with this? Okay. Next one is value in use. For class purpose, we'll call it as VIU. Value in use. What is this? What is the meaning of this? By using the asset, how much benefit you will get. Okay. So value in use is that only, right? You just have to find out value in use is the present value of the future cash flows derived from continuous use of the asset as well as the present value of residual value. What did I say? You just have to take present value of FCF as in future cash flows plus present value of residual value. Present value of residual value. If you add these two, you will get something called value in use. That's it. So I did not understand, sir. Okay. Sir, are you finding impairment loss tomorrow or after 1 year or today? Today. You're finding the impairment loss today. Sir, if I have an iPad now, this iPad I have, I am going to use this iPad for, let's say, for the next 5 years. I have plans to use this iPad for the next 5 years. That means by using this iPad, I will get the benefit today or over a period of 5 years. The benefit I'm going to derive from this iPad is what, sir? Over a period of 5 years. That means benefit, is it on today's terminology or future value? Future. Because benefit I'm going to get in over a period of 5 years, correct? But I am doing the impairment check after 5 years or today? Today. Hence, whatever future benefits you are getting from that asset, find out what of that? Present value. Because you are not doing impairment check later on, you are doing it today. That's okay, Ji. And after 5 years, what will I do? Once this has reached its limit, I will scrap it off. So take that present value of residual value also for this calculation. Because once the usage limit is reached, we just sell it off for some amount. No, that is also cash flow. That is also benefit. Take that. I will sell it now or after 5 years. After 5 years. That means this residual value is today or after 5 years. But I'm doing the impairment check today. So find out the present value of this. By adding these two, you will get something called what, sir? Value in use. This and all you'll have to calculate. Again, problems I'll take you through provided we have time. But that's how you'll calculate. But conceptually going in, no problem. Those of you who are learning for the first time, oh, she's giving double thumbs up. That means nothing understanding. Yeah. Okay. All right. So we are sorted with this. Next few things you need to keep in mind is, sir, AS 28 assumes that future cash flow should be restricted to 5 years. The maximum period of future cash flows you can take is how much? 5 years. That again, AS 26 may we had presumptive life of 10. Here, future cash flows, AS 28 is saying take for a period of 5 years. You can take more period provided you can justify. If you can prove that no, my asset will give benefit for 10 years with the reason, then you can take 10. Otherwise, future cash flow you will only restrict it to how many years? 5 years. Okay, Ji. All right. Now, when you're finding this future cash flows, FCF, few things you need to ignore. That's what I've written here. Okay. Few things you need to ignore. What is that? One is income tax receipt and payment. Because is income tax really a payment or a receipt related to one asset or overall business? Overall business. So if you have paid any income tax, that is also cash flow. No? If you pay any tax to the government, that is also cash flow. Suppose you paid more tax and income tax refunded that amount to you. You got an income tax refund. It's a receipt. It's a cash flow. Don't take that for your future cash flow calculation because this is related to business as a whole and not a particular asset. That's one. Second one, again, if you're doing some restructuring activity, any cash inflows or outflows associated with restructuring, ignore. You don't have to mug this up. Just know it in case they bring in this into a question. You should know it. So far, I have not seen, but you never know ICI, right? Just discuss. So one quick review should be enough for all this. Restructuring cash inflow and outflow should be ignored. What is restructuring? Suppose I am planning to shut down a particular division. Suppose one division I am planning to close down. Okay, that's a restructuring. One product I am planning to shut down. That's a restructuring. Some management people, they're not doing good job. We fired them. Management, some directors, we fired. All that we call it as what's a restructuring. When you do those restructuring activity, there will be certain inflows and there will be certain inflows. Because when you sell a division, you will get money. When you sell a division, you will get money. When you fire some management people, they will say, give me some money as compensation. Right? So all those restructuring inflows and outflows, is it related to one asset or business as a whole? Business as a whole. Again, ignore this as well, if at all they've given. Done. And then any asset enhancement cost and enhancement benefit, ignore. Asset enhancement cost and enhancement benefit, you ignore. What do I mean by that is, sir, suppose I have a factory. From that factory, currently, let's say I can produce 1 lakh units. I can produce how much goods? 1 lakh units. Now I want to expand my factory capacity. I want to extend my factory so that from 1 lakh units, I can produce how many units? 3 lakh units. Possible. It's possible, right? That's what we have done also. Initially, this was not our premises, right? Our premises was Vaju, next building, right? Some Rosy Towers, that one. Now we have shifted to this because so many Bruhaspatis like you want to attend. So shortage of space. So we took a bigger space, correct? No. Same thing here also. We want to do a capacity expansion so that from 1 lakh units, we are able to produce how much? 3 lakh units. Now you tell me, if I am producing more goods, I will get less benefit or high benefit? Due to this capacity expansion, I will get more benefit. But to expand this capacity, I'll have to incur a cost. Now, if we have 2 buildings, means we will pay 1 rent or 2 rents? 2 rents. That means when you enhance a capacity, there will be cost also, there will be benefit also. This one you have to ignore. Though this is related to an asset, we ignore. Why is it? Impairment is current condition checking. Current condition check. The way the asset is right now, okay, that asset condition as it is, we like check if it is impaired or not. So the future if you are planning to do some changes to that asset, so such changes are ignored, or rather that impairment gets considered in future. So as the way the asset is, in whichever condition the asset is right now, for that you need to do an impairment check. So hence these 2 components also gets ignored. Again, no need to mug up, just know it in case it gets tested. Okay, people? Done, people? They're saying yes only. Sir, what if I get cash flow in foreign currency? What if I get some cash flow in foreign currency? We have done one sum also on this in a regular class. Now, no time for sum more, I'll just tell the concept of it. How do you get value in use? Tell me. How do you calculate value in use? Present value of future cash flows plus present value of residual. Now, all of my cash flows are in Indian Gandhi nota or foreign currency? Foreign currency. Right? Why? Sir, I export the goods. I export all my goods. I am a 100% export oriented unit. I don't send anything in India. 100% Videshi, Swadeshi nahi, Videshi. Okay, I am that. Full. Means I produce the goods and I sell the goods. Not in India, outside. USA. Donald Trump is my friend. Okay, alright, I export 100% of my product to US. Okay, that means all the money I'm going to get, is it going to be in Indian rupees or dollars? So what if my cash flows are in foreign currency? In that case, what you have to do? Very simple step. Same thing you do. What? First take foreign cash flows. First take cash flow in foreign currency. We want future cash flows or we want present value? Present value. So what you'll have to do is first take the cash flow in foreign currency. Right, all this cash flow will be in today's terminology or future? Future, because I'm not going to get the benefit now. I'm going to get the benefit over a period of time. That means we have to find present value. To find present value, what do we do is, we take the future cash flows and multiply by the discount rate. We have done it in FM and all. Take the cash flow and multiply by the discount rate, which will be given to you in the question. But hang on. Now what they'll do is, they will give you Indian discount rate. They will give you US discount rate. They will give you 2 discount rates. Indian and US. This cash flow is related to Indian currency or foreign currency? Foreign currency. So discount rate also you take for foreign currency. So take the cash flow in dollars. Take the discount rate related to dollars. That means you will first get what? Value in use in dollars. You'll get value in use in dollars. From value in use from dollars converted into value in use in Indian rupees by multiplying exchange rate. That exchange rate is determined by AS11. Or I'll tell you in one liner. Whichever day you want value in use, whichever date you want value in use, that day ka exchange rate you take. It will be given to you in the question. Suppose you want to find value in use on 31st March. Then take 31st March ka exchange rate. It will be given to you in the question. This is what you do it for. Foreign cash flows. Not much sum has been asked, but one question is there in our study material and we have covered it in our regular class also. But overall, I think this is fine with you. Okay, let's go one step back and kind of recap this for us. So the overall ideology or the funda or thought process of AS28 is to make sure that asset is not overvalued. Okay, and AS28 talks about impairment of assets. There is no impairment of liability. There is only impairment of asset. To every asset? No, predominantly two assets, which is what? PP and intangible asset. Impairment, to calculate impairment loss, we compare two things. What are those? Carrying amount with recoverable amount. And impairment loss will only come under one and only one scenario, which is what? If carrying amount, if it is greater than recoverable amount, only then you will get something called impairment loss. How do you calculate recoverable amount? By comparing two things and taking the higher of the two. One by using it, how much you will get. One by selling it, how much you will get. The selling benefit, we call it as net selling price. The using benefit, we call it as value in use. Okay, Ji? Alright. How do you get value in use? By adding up two things. Present value of the future cash flows plus present value of the residual value. Okay, that's pretty much the way we calculate value in use. By how do you calculate NSP? From the sale value, you reduce your selling expenses. Then you will get your net selling price. Okay. Few things you'll have to exclude. Maximum future cash flow you will take is 5 years. You can take more than 5 provided it is justifiable. Okay. Excuse me. When you're finding out future cash flows, will you take restructuring cash flows? Whether it is inflow or outflow? No. Income tax receipts and payment? No. Future asset enhancement cost and enhancement benefit? No. Because impairment is a current condition activity and not this. Alright. What if you have a foreign currency cash flows? First find out value in use in foreign currency only and then convert it into Indian currency using what rate? Exchange rate. Which day ka exchange rate? Whichever day you want value in use, that day ka exchange rate you use. That's pretty much it. And where will you transfer impairment loss to? First you will adjust it with RR. If RR is not there, PL. That's all pretty much what we have learned. Okay. Okay. Next, sir, iPad. Okay, I have an iPad. Can you tell me how much benefit I will get from iPad? Forget about the screen, what I've written and all. I have an iPad. Can you tell me how much benefit, or let's say, or maybe let's go with this example since we have started. I have an iPad. Can you tell me how much benefit I will get from this iPad alone? Don't say selling. I'm not asking selling. I'm saying by using this iPad, how much benefit will I get? Determinable or not determinable? Now from ArivuPro Academy, yes, this iPad is being used to conduct a class. Am I using only iPad or there are other assets? I'm using TV, mic, camera, laptop, all this we are using, right? When all these are used together only, we get a product called class, which we can give a service or sell the product or whatever it is, yes or no. That means individually, how much benefit I am getting from that asset, can I find out or not determinable? Not determinable. Yes, no. But recoverable amount says it's a higher of two things. What are those? Value in use and NSP. From this iPad, can I find out value in use or I cannot find out? Cannot find out because it does not give individual benefit. I have to use many assets to generate the benefit. So if I can't find value in use for iPad, how will I calculate impairment loss for this iPad? Understood? If I can't find value in use for this iPad, how can I test the impairment check of this iPad alone? It means ignore. If they had said ignore, you happy, I happy, everybody happy, right? No, they said no, sorry. Fine, we understood your problem. Individual asset may not generate individual benefit, but a group of asset can generate. Now for us to conduct the class, so we have TV, Micro and all this 4-5 assets together. Can you find out the benefit? Yeah. That means if you cannot do impairment check at individual level, do it at group level. Do it at group level. That group only we call it as cash generating unit, or commonly known as CGU. CGU is nothing but you're doing impairment check only, but not for individual asset, but for a group of assets. Because there are many assets, they don't generate independent benefits. But when they are used together as a group, they will generate benefits. So now we are talking about group level ka CGU. Any problem or okay? Meaning is okay? Is it okay? I have another 3 concepts. Can I finish it off and then take up the question with you? Or you want to do some questions on the individual only first? Is it okay? Are you understanding? No issues? Okay, CGU means what again? We are doing the impairment check at what level? Not at individual level, but at group level. Now, the thought process or the calculation mannerism is same. What is it? How did you calculate impairment loss individually? Tell me. Don't look at the screen. It is not there. Boss, what did we discuss previously? How do you get impairment loss? Compare carrying amount with recoverable. At group level also, it's the same way. Now, you will find carrying amount not of individual asset. You will find carrying amount of CGU. That group only we call it as CGU, cash generating unit. Find carrying amount of CGU. Compare it with what? Recoverable amount of CGU. That way, if carrying amount of CGU, if it is greater than recoverable amount of CGU, then you will get what? Impairment loss of CGU. This is not individual asset ka impairment, it is group of asset ka impairment. That's how to test. Danaji. Sir, how many groups are there, sir? AS28 says CGU means not the largest group, it is the smallest group. You have to find the smallest group of asset that can generate independent benefits. Now for ArivuPro, I think if we have TV, if we have mic, if we have camera, if we have iPad, and if we have the system, we can generate class. That means this 4-5 assets becomes one group. I don't have to include AC, GCN. Probably I can include, because these 4 are, if I use them, I will be able to find out how much benefit they are generating. So CGU means not the largest group, but the smallest group of asset which can generate your benefits or cash flows. Clear, Aji? This is one. Okay. Now, people, I have a goodwill. We already know there are 2 types of goodwill. What are those? Purchased goodwill, self-generated goodwill. Self-generated goodwill, account not permitted. Purchased goodwill, can you account? Yes, as per AS14, right? Now I have a goodwill. Can I do impairment check for goodwill? Can I do impairment check for goodwill at individual level? Can I do impairment check of goodwill on individual level? Possible, not possible? Not possible. Why? Can goodwill alone generate benefit, or goodwill is just a balancing figure? You don't know what to account. You compared PC with net assets. Why you paid more, you don't know, right? AS14 told account it as one balancing figure called goodwill. It's a simple balancing figure which you are giving a fancy name called goodwill. Can that balancing figure generate independent benefits? That means, what am I trying to say? Goodwill ka impairment can never be done at individual level. It should be always done at what level? CGU. You can't do impairment check of goodwill never at individual level, but always at what level? CGU level. Okay, that's one. So what you will have to do is, okay, first allocate the goodwill to CGUs. Now, is it necessary we should have only one group of asset in the organization, or we can have more than one group? More than one group. Now here, these 4 assets in Chennai is one CGU. These 4 assets in Chennai branch is one CGU. I can have same 4 assets in Bangalore also. That becomes CGU number 2, because that is generating separate benefit. This is generating separate benefit. So that means Coimbatore ka 4 assets become CGU number 3. So is it necessary we should have only one CGU, or we can have more than one? We can have more than one. So what you'll have to do is, when you have goodwill, right? When you have goodwill, first allocate the goodwill to all the CGUs. Usually in carrying amount ratio. First allocate, because goodwill impairment you can never do it at what level? Individual level. So first allocate the goodwill to what? CGUs. And then do the impairment check. When you allocate, the carrying amount of CGU will be same, or it will change? it'll change. Compare this carrying amount with this recoverable amount, and that way you will get what, sir? Impairment loss. I'll just give you a minute on this. Observe and ask me if you have any doubt, or I can proceed. Recorded students, you can chill pill. Some of you might be watching in YouTube. You can also review it. Done na? Any problem? No, all good. Okay, na? Okay, I'll tell you. Maybe, I think maybe this I will tell and then go on to this. Sir, what do you do for goodwill again? Tell it back to me. Can you do impairment check of goodwill at individual level? No. But always at what level? CGU level. That means what you have to do? Allocate goodwill to CGU. Usually we do that allocation in what ratio? Carrying amount of CGU ratio. That will be given to you in the question. You allocate that. These are not the questions which are often tested. Once in a blue moon it comes. But these are all tested at a good level in Ind AS 36 CFIN. CGU concept. Not much tested at inter level so far. The word is so far. In your attempt, you might be the lucky ones. I don't know. I don't know. I'll take a back seat there. Yeah? That is between transaction between you and ICA. Who am I there? I'll take a back seat. Huh? But easy only. So I'll just tell once. So this is okay. Now what you did for goodwill, same thing you'll have to do something for corporate assets. What you did for goodwill, same thing you'll have to do it for corporate asset also. So what is corporate asset? Now let's say people. Now. Okay. Now ArivuPro ka CGU, maybe we'll take this example on yours. Now let's say one CGU for ArivuPro is CA. CA division is one CGU. You can define the CGUs in multiple ways. It could be product wise, it could be location wise, it could be course wise, it could be anything, right? So for the sake of example, I've assumed CA division is one CGU for us. CS division is a CGU number 2. ACCA is CGU number 3 for us. So how many CGUs we have in this example? 3. Okay. All right. Now people, I have a building. ArivuPro, let's say, owns a building. In that building, we are doing a research center. We are running it as a research center. Meaning we are thinking what new business to start. What new business to start. Right now we are in coaching. Now we are thinking can we diversify and get into something else. Not CA, not CS, not ACCA. We are thinking about starting something. Just an example. Don't spread rumors. Just example. We are thinking about what, sir? New business. Now you tell me, is this new business anyway related to CA, CS or ACCA? Now this new business, is it anyway related to CA, CS, ACCA or unrelated? Sir, if it is related, you will allocate this research building to 3 CGUs. If it is related, you will allocate. If it is unrelated, can you allocate or you cannot allocate? You cannot allocate. So what is the point I'm trying to say? Some goodwill and corporate asset can be allocated. Some cannot be allocated. So how will we know? Question will tell no. Why are you taking load? Question will tell whether it can be allocated or it cannot be allocated. If it can be allocated, what you will do? Allocate it. In what ratio? Carrying amount ratio. Okay, fine people. Or there could be some goodwill or CGU which the question may specify it cannot be allocated. These words will be specified to you in the question. Whether it is allocable or not allocable will be specified. You don't have to worry. On the same page till here? On the same page till here? Yes. Sir, if it can be allocated, then you do one test. That we call it as bottom up test, not bottoms up. Dirty minded people, listen. S is not there. Bottom up test. If it can be allocated, we do only one test, which is what, sir? Bottom up test. Bottom up. Still, hey, come out. Bottom up test means doing impairment check at CGU. Doing impairment check at what level? CGU level. Okay, that's all it is. If you can, going back to the same example, goodwill is allocable. So how many CGUs do I have? 3. So what will I do? Tell me once again. If goodwill is allocable, goodwill amount I will allocate to how many CGUs? 3 CGUs. In what ratio? carrying amount ratio. Yes, sir. After that, I will do impairment check of what? CGU. How do I do impairment check? I'll take the carrying amount of CGU, compare it with recoverable amount of CGU. That way I will get what? This group, has it suffered impairment loss or not? I can find out. That test is what we call it as fancy name. We call it as what, sir? Bottom up test. Bottom up test. Suppose the question says the goodwill or corporate asset cannot be allocated. Cannot be allocated. Like this example, it is allocable or not allocable? Not allocable. Why is it not allocable here? You tell me. This research building and these three buildings, are they related or totally unrelated? Totally unrelated. That means, can you allocate? No. So if the question says it cannot be allocated, then you'll have to do two tests. Then you'll have to do what test? Two tests. One you already know now. What is that? Bottom up test. Sir, if one is bottom up test, means next test will be ulta, top down test. If it again, don't need to use your creativity here on different things. Stick to the subject only. Yeah. If it cannot be allocated, you'll have to do two tests called what, sir? Bottom up test, top down test. Bottom up test, top down test. Okay, sir. Sir, bottom up we got it. Oh, that is doing the impairment at what level? Oh, CGU level. What is this top down test? Oh, top down test means doing the impairment check. You cannot allocate, no. Check if overall company only itself is impaired. Check if overall company only is impaired. That overall company level impairment check, we call it as what, sir? Top down test. That means now you have to find out carrying amount of the company. You have to find recoverable amount of the company. No need to take load. It will be given to you in the question. Carrying amount. If you add carrying amount of, sir, if you add all the CGUs, what will you get? If you add all the CGUs, you will get company data, no? By adding the carrying amount of all CGU, you will get carrying amount of the company. Recoverable amount of the company will be given to you in the question. Again, do the comparison. Carrying amount, you compare it with recoverable amount and then find out if carrying amount, if it is greater than recoverable amount, overall company is impaired. This is the drama. But this is not that very important for exam. I think one attempt back it came. Last 3-4 attempts back, I think this was not tested. They always use the, I think mostly they will pick individual asset ka impairment, CGU ka impairment test. If they want to make the paper little interesting, they may pick it up. By that you got to know what I mean, right? So otherwise they may not pick it, but it's pretty easy only. One way or the other, if you don't learn it now, you'll have to learn it in final. So it's not going to escape. There's no escape. It is there. Yeah, but it is just that it depends on you when you want to learn. That's all. Okay, but so far okay. Not okay, sir, but we'll still say yes, sir. Yes, sir. Give it just a minute. Just observe. This again, maybe I think they may pick it as one marker MCQ is what I feel. Bottom up, top down, allocable, not allocable. So one read would be suggested in my view. We have done questions. Regular students say, if you give me a weird look, I will pakka dishum only. We have done 2 questions on this. One example and another example in ICA study material only. It is there. We have done. Okay. Now, in the interest of time, I'm not going to go into the question. I'm keeping it at concept level. Once more, you want me to tell or okay now overall? Overall, this is okay? Sit down, it's fine. Yes. First, you do bottom-up test. It's a specific question, may not be relevant for everyone. Okay, I'll just take it here. First, you do bottom-up test. Whatever impairment loss you're going to get, allocate. Your carrying amount will change. Use that carrying amount for top-down ka impairment. Correct. Yeah. Others, no worry. It's a question of the question. I mean, what we have done in class, I think she is referring to that and asking. That's okay. It may not be relevant for everybody. Leave that out. Now, people, let's go into little more, maybe something which you can expect in exam if at all CGU ka impairment comes into picture. First of all, CGU means what? Help me understand this a little better. CGU means what? Individual or group? Group. It's not one asset, it is group. So how do you do CGU ka impairment loss? Tell it back to me. What is it? What do you do? First, find carrying amount of CGU. Compare it with what? Recoverable amount of CGU. If carrying amount of CGU, if it is greater than recoverable amount of CGU, what will you get? Impairment loss of the CGU. Right? This is impairment loss of one asset or many assets? Many assets, because CGU means not one, it is many. I mean, this impairment loss also relates to many assets. So what you have to do is, this impairment loss you will have to allocate, because this is not one asset ka impairment, this is many asset ka impairment. So if a group is impaired, that group ka impairment loss you will allocate. Among whom? Group ka assets. In what ratio? Carrying amount ratio. Comfortable, but hang on. There's one touchy point here. Sir, group has goodwill, or group can have goodwill. Goodwill, is it really an asset or balancing figure? Balancing figure. Sir, if something is a balancing figure, do you want to keep it or strike it off as early as possible? Strike it off. Yes or no? Because it is not really an asset. It is just a balancing figure as per AS 14. Hence, what AS 28 says is, if you have any impairment loss of CGU, maximum possible impairment loss, first you allocate to goodwill. Because it is not really an asset, it is just a balancing figure. Just to give you a little context, or maybe let's do this. Let's say carrying amount of CGU is 10 lakhs. Recoverable amount of CGU is, let's say, 7 lakhs. So do you have any impairment loss of CGU? Tell me this. How much is the impairment loss of CGU? 3 lakh. Everybody okay till here? Now people, this CGU, it has goodwill to the extent of 2 lakh. It has, let's say, plant and machinery to the extent of 5 lakh. It has software to the extent of 3 lakh. Okay, now? Oh, fine, no issues. This is the group. These three put together has become what, sir? These three put together is one group. That's what I assume. Now, this group, has it suffered impairment loss? This group, has it suffered impairment loss? Yes. This is one asset ka, this 3 lakh is one asset ka impairment loss, or 3 assets ka impairment loss? 3 assets ka, because this is an impairment loss of the group. So you'll have to allocate this impairment loss. How will you allocate? First, you will allocate maximum possible impairment loss. You'll adjust with what? Goodwill. Because goodwill is really an asset or balancing figure. How much goodwill this CGU has? 2 lakh. That means out of this 3 lakh impairment loss against goodwill, how much will you adjust? 2 lakh. Why 2 lakh? Because goodwill ka maximum available balance is only 2 lakh. This is the maximum available. Allocate. Still any impairment loss is pending. Yes. How much? 1 lakh. That 1 lakh you allocate to what? The remaining assets of the CGU. What are the remaining assets of CGU? Plant and machinery and software. In what ratio? In carrying amount ratio. What is their carrying amount? 5 lakh is to 3 lakh or 5 is to 3. That means how much will you allocate to plant and machinery? 1 lakh in the ratio of 5 is to 3. 1 lakh into 5 by 8 is how much? 60 to 500. How much will you adjust against software? 1 lakh into 3 by 8, which is 37,500. Like this you will allocate. Done, Ji. This is the whole concept. Okay. Yeah. Fine. No. After you allocate impairment loss, so what will happen to the carrying amount? After you allocate impairment loss, so what will become the carrying amount of plant and machinery? I told you impairment loss ka entry is what? Same like depreciation. Visualize the entry and tell me. Impairment loss account debit to plant and machinery 60 to 500. Impairment loss account debit to software 37,500. Means asset account is getting credited, means its balance will increase or it will reduce. Means what will be the carrying amount of plant and machinery? Before impairment, how much it was? 5 lakh. After impairment, it will be 5 lakh. No. It was 5 lakh before. You allocated how much impairment loss? 60 to 500. That means the carrying amount of this plant and machinery will be 4,37,500. Similarly, what will be the carrying amount of this software? Before impairment, it was worth how much? 3 lakh. How much impairment loss you allocated? 37,500. So it will be how much? 2,62,500. What will be the carrying amount of our goodwill, Maharaj? It was how much? 2 lakh. How much impairment loss you allocated to goodwill? 2 lakh. That means this has become done, Naji. That's how it will work out. Some of you are giving weird face. You have not done all this, huh? Mauna. Mauna means what now? Done na, not done na. What is it? Okay, at least leave that. Now at least do you know the basic understanding? This I think can be tested. I think last 1 or 2 attempts made. I think this came. So I'm giving you some number context. If it comes, how to do it. Overall, I think you must be comfortable, right? Okay, people. One extra sentence I will tell now. Pay it again. May not be that very important for exam, but still maybe 1 marker MCQ might be relevant. So good to know in my view. Listen to this carefully. After you allocate impairment loss, after you account impairment loss rather, carrying amount of the asset will be same or it will reduce. After you adjust impairment loss, carrying amount of the asset will reduce. Yes, sir. Right? Now, you can't reduce the carrying amount to any extent. There is a lower limit. There is what limit? Lower limit. Whenever you're doing impairment loss of CGU, you're not doing individual asset ka impairment. You're checking impairment at what level? Group level. Right? So what it says is after you allocate impairment loss, listen to this carefully. After you allocate impairment loss, carrying amount of an individual asset, should not fall below. Carrying amount of individual asset should not fall below highest of 3 things. It should not fall below highest of 3 things. 2 you already know. RA ka 2 components. Tell me. Recoverable amount ka 2 components. What are those? NSP and value in use. Third component is meaning it should not fall below 0. Meaning it should not become negative. So suppose carrying amount of plant and machinery is 5 lakh. Can I adjust 6 lakh impairment loss? Logically, will it make sense? No. If I allocate 6 lakh impairment loss, PP amount will become negative. That is not acceptable. This is one rule. So whenever you are allocating impairment loss for CGU, after you allocate impairment loss, carrying amount of the asset should not fall below its recoverable amount or it should not become 0. So this is the limit for 1 or 2. This may not be tested at numerical level, maybe at MCQ level. Good to know in my view. But overall, I think logically it makes sense to you, right? No? Correct or no, sir? Yeah, any doubt? It can't become 0. It can't go negative. Perfect. So what he's saying is, sir, if carrying amount is 5 lakh, if impairment loss is 6 lakh, what do I do? Right? You can't book 6 lakh impairment loss. You can only book 5 lakh. Against machinery, you can book only 5 lakh and make the machinery to be what? 0. How much impairment loss you could not book for machinery? 1 lakh. That you book it for software. Group has other assets. So if any asset is becoming negative, then you give it to what? Other assets. Not at your level, final level may come. This is a second level cascading effect, we call it. Okay, but I think too much, not required. But valid question. Hope I did a reasonable justice to that. Others are wondering, you wind up the class. That is the biggest justice you can do to us. But okay, napa overall guru. Easy only. Individual questions are pretty easy, straightforward. It's also easy only, no. If you say so. Okay, people. Next one. Sir, can you reverse impairment loss, sir? Can you? You booked, so far we were talking about what? Booking the impairment loss. Now we are talking about what? Reverse. Sir, can you reverse impairment loss? Absolutely. When you booked the impairment loss, what was the main criteria you looked for? Indicator. When indicator came, you booked an impairment loss by comparing carrying amount with recoverable amount. Yes, sir. If that indicator is no more there, or if its effect has reduced, like COVID was an impairment indicator. Because due to COVID, many business assets, they were not able to use it properly. Many factories were shut down. So COVID was an impairment indicator, but COVID vaccine, when COVID vaccine came, people threw their mask. Freedom. Yes, no. Correct or no, sir? Many people stopped using mask post that. Yes, no. So COVID vaccine becomes what? Your reversal indicator. So if that indicator is not there, or if that indicator ka effect, if it has reduced, impairment loss reversal also is permissible. Okay, G. Okay. Yeah, just keep this in mind. That's okay. So how do you reverse impairment loss, sir? That depends. Whatever you have done, you need to undo. Whatever you have done, you need to undo. So first check how have you charged impairment loss, whether at individual level or CGU level. If it is individual asset ka impairment loss, you would have first booked impairment loss, you would have adjusted with RR and then with P&L. Same thing you'll have to do it here also. If impairment loss was initially adjusted with RR, reversal also will happen through RR. If impairment loss was accounted through SPL, reversal also will happen through SPL. Entry ka ulta you have to do. Whatever entry you passed earlier, you need to reverse. That's it. Okay ji, pakka ji. For reversal, one extra limit is there. Is it okay if I tell this? Will you feel bad? No, I will, sir. It's okay. Sir, carefully listen to my sentence and give me one answer. When you book impairment loss, what will happen to carrying amount? It will reduce. Perfect. When you reverse impairment loss, carrying amount will increase. For booking an impairment loss, there was a lower limit. Do you agree? For booking an impairment loss, there was a lower limit. You can't make the asset value negative. That means for reversal, there must be what limit? There must be an upper limit. For booking, if there was a lower limit, for reversal also there must be an upper limit. What standard says is, okay, let's take this example. I think then I'll connect it back to the words. Now, let's say the current carrying amount of an asset is 2 lakh. Carrying amount is how much, sir? 2 lakh. Last year, let's assume last year. Last year, you had already booked how much impairment loss? 70. Okay, you have already, not this year, last year you booked impairment loss how much? 70,000. So far, good. Currently, what is the carrying amount? 2 lakh. Last year, how much impairment loss you had accounted? 70,000. What standard says is, if you had not accounted this impairment loss at all, impairment loss at all, what would have been the carrying amount? What would have been the carrying amount? First find that. If you had not booked this impairment loss in the last year, what would be the current carrying amount of that asset? Let's assume it would have been how much? 2,50,000. Because due to impairment loss, carrying amount will reduce. If you had not booked this, it would have been 250, let's assume. Sir, it should be 270, no sir. No, there is depreciation also, no sir. There are a lot of other factors. Don't worry about that. This will be given to you in the question. Okay, Ji? If you had not booked this impairment loss, then the carrying amount, I've assumed it to be how much? 250. Now, indicator has got reversed. Sir, when indicator came, what did you do? When indicator appeared, what did you do? You booked impairment loss. How much? 70. Now that indicator has got fully reversed. That means, can I fully reverse impairment loss 70? No. Standards. Because if you fully reverse impairment loss, when you book impairment loss, carrying amount will reduce. When you reverse impairment loss, carrying amount will increase. When you reverse impairment loss, how much it will become? 270. When you reverse impairment loss, it will become 2 lakh plus 70,000. It is 270. But there is an upper limit. What is that upper limit? The upper limit is, after reversal, carrying amount of the asset should not exceed carrying amount if impairment loss was not charged at all. If you had not booked impairment loss previously, what would have been the carrying amount? That is the maximum upper limit. How much is that now? 250. That means from 2 lakh maximum you can increase and bring the asset up to how much? 250. So how much can you reverse? 70 na 50 na. So impairment maximum reversal permitted is only 50. So the revised carrying amount will become this is a thing. This can also be tested. I don't know whether they've tested this or not so far, but if at all they test, more or less similar numbers will be given to you. I think you can manage. Pakka na. Are you seeing stars already here? Stars already here? Okay. Confidence is little low. One more example. Sir, let's say the carrying amount of plant and machinery. You don't have to write, just listen. Carrying amount of plant and machinery current year is, let's say, 7 lakh. Currently, machinery ka carrying amount is how much? 7 lakh. Pay attention. Those of you who are still having a little bit of buku, listen. Carrying amount of machinery currently is how much? 7 lakh. Last year, impairment loss already accounted is, let's say, 1 lakh. Last year, on this asset only, on this machinery only, you had booked how much impairment loss? 1 lakh. Already accounted last year. Okay, Ji? Now indicator in the current year has got reversed. When indicator has got reversed, should this impairment loss necessary or can you reverse impairment loss? When indicator comes, you will account impairment loss. When indicator gets reversed, impairment loss also can be reversed. The question is, can you reverse impairment loss fully or not? The question is whether can you reverse this 1 lakh impairment loss fully or not. Before you answer this question, first find out one thing. What is that one thing? First find what would have been the carrying amount if impairment loss was not charged at all from the beginning. If at all you had not charged impairment loss from the beginning, what would be the carrying amount of this asset? Let's assume that is 7,70,000. It will be given to you in the question, or they will give you some data to calculate this. That would have been how much, sir? 7,70,000. Yes, Ajay. Now, when you charge impairment loss, carrying amount will reduce. When you reverse impairment loss, carrying amount will increase. Now, if I reverse 1 lakh from 7 lakh, my carrying amount will become 8 lakh. Can I bring the asset to 8 lakh? Logically, will it make sense? Sir, if this impairment concept itself was not there, maximum carrying amount would have been how much? 7,70,000. Yes, no. That means it makes sense to bring the carrying amount only up to how much? Maximum how much? 7,70,000. So that means from 7 lakh, you can bring it up to how much? 7,70,000. So how much impairment loss you can do the reversal? This is what? Maximum impairment loss that you can reverse is the difference of these two, which is how much? 70,000. So when you book impairment loss, carrying amount will change. When you reverse impairment loss, also carrying amount will change. From 7 lakh, if you reverse impairment loss of 70, then the revised carrying amount will become. That's all this is concept. Now, little better. Okay, people. Sir, what if it is CGU, sir? CGU means there are two upper limit. CGU means there are two upper limit. One we already know. What is one upper limit? Carrying amount if impairment loss was not charged at all. Another one is recoverable. For individual, only one upper limit, which is carrying amount without impairment loss. For CGU, two upper limits. One is carrying amount if impairment loss was not charged at all, or recoverable amount. One of those. Again, this one I highly doubt that it will be tested for you. It will become a little too much, okay, at your level, but just say. Okay, Naji. That's all is the overall concept of AS28. One recap we'll do, then we'll go into questions. Standard name. AS28, impairment of assets. Only assets will be impaired, not liabilities. All assets, PP, only PP and intangible assets. Impairment loss will only come if carrying amount, if it is greater than recoverable amount. How do you get recoverable amount? Higher of two things, net selling price or value in use, whichever is higher. You have to find recoverable amount every day, every month, every week? No, only when indicator comes. Indicator could be either external or internal. Okay. Now, impairment loss, where will you transfer? First, you will try to adjust with RR. RR not there? P&L. Okay, like that. Alright. Now, every asset, can you do the impairment check at individual level? No, because some assets may not give individual benefit. In that case, you will do impairment check at what level? Group level. That group only we call it as CGU. It is the largest group or the smallest group? Smallest group. Okay. Now what you will do? Find out carrying amount of CGU. Compare it with recoverable amount of CGU. Then that way you will get to know if there is any impairment loss of the group. But before you find carrying amount of CGU, you will have to keep two considerations in mind: goodwill and corporate assets. Sometimes goodwill and corporate assets can be allocated. Sometimes they may not be allocated. If it can be allocated, allocate to all the CGUs in what ratio? Carrying amount ratio. Okay. If it cannot be allocated, don't allocate. If you can allocate, you will do impairment check. Only one test you will do. That is what? Bottom up test. Went off. Huh? Someone is what? Now okay, nah. Okay. Fine. Suddenly don't scare me. All right. Okay. What was I saying? I forgot. Now, if goodwill and corporate assets can be allocated to CGU, then you will only do one test called bottom up test. Bottom up test simply means you are doing the impairment at what level? CGU level. If goodwill or corporate assets and corporate assets, if it cannot be allocated, then you will have to do bottom up test as well as top down test. Meaning you will have to do impairment check at CGU level also, overall company level also. Now, if you are doing impairment check at CGU level, thought process of the line item is very simple. First, find carrying amount of CGU, compare it with recoverable amount of CGU. That way you will get what? Impairment loss of the CGU. This is not impairment loss of one asset. It is for the group. That means you'll have to allocate. Will you allocate to all the assets in their carrying amount ratio or first priority to something? If CGU is impaired, maximum possible impairment loss, first you allocate to goodwill. Why do we do that? Because goodwill is not really an asset. It is just a balancing. After that, still if any impairment loss is there, you give it to the other assets of CGU in what ratio? Carrying amount ratio. Now, when you book impairment loss, carrying amount will reduce. Can you bring it down to any amount or there is a limit? There is a lower limit. What is that lower limit? It cannot become negative, meaning it cannot fall below 0, or it cannot fall below recoverable amount. Recoverable amount ka two components are NSP and value in use. Great. Okay. Sir, can you reverse impairment loss? If indicator has reversed, or if indicator ka effect if it has reduced, you can reverse also. Okay. First check, before you talk about reversal, first check how did you charge impairment loss? At individual level or CGU level? If you had booked impairment loss at individual level using RR, then reversal also will happen through RR. If you had booked impairment loss at individual level using SPL or P&L, then reversal also will happen through P&L. Okay. When you reverse impairment loss, carrying amount will increase. Can you bring it to any amount or there is an upper limit? What is that upper limit? First, to find if this impairment concept, if it was not there. If this impairment concept was not at all there, what would have been the carrying amount? And that is the upper limit. Beyond that, you cannot increase. This is for individual. Similarly, if you are doing reversal of CGU level, there are two upper limits. One, carrying amount if impairment loss was not charged at all or recoverable. That's it. Easy. 5 minutes, no, sir. Or big deal. Okay. Yes, sir. There is an example in study material. It's the same thing. Follow this and take it out. Okay. Yes. In one of the there are in that example 2 ways we have solved. I think you have not taken class from me. Okay. There are 2 ways you can solve that question. One top down bottom test that is implemented there. I've covered it. Or someone who's taken class from me. Can you just give his notes to him that whatever we have solved? Can you share that to him? Maybe you can look through that. I don't know whether it will come or not. It was an example in study material. I didn't want to take a chance and I solved it. Okay. But maybe once review that, it might give you a better idea. Now, no, all others. Yeah, that is the reason. First, I would like to cover those questions which are more expected kind of in exams as per me. Okay, what will I take this? Okay, maybe I'll take up this. We have how much? Okay, people, we have around, I think, 20 minutes. So I think I'll take maybe 2 questions. I'll try it 1 minute. Give me a time. Okay, maybe I'll start with this. I think this one you'll appreciate. Okay. From the following details, so you have to find 3 things. So impairment loss, the treatment of impairment loss, current year ka depreciation. They have given cost of the asset. Sir, whenever they give cost, it is original cost. It's a study material question only. So when they say cost, it always means original cost. Sir, you tell me, for impairment loss, we need original cost of carrying. I mean, this figure is irrelevant, not required for us in AS28 context. Life for 10 years, salvage value 0. Most important data, current carrying amount. That means they gave carrying amount. This is what we need. They gave useful life remaining. Yeah, I think this is required for us to calculate depreciation. So let that be on hold. Recoverable amount they gave. Awesome. That's what we need. And they told upward revaluation done last. Upward revaluation means it is a case of revaluation gain. Upward means value is increasing. Downward means value is reducing. If it is a revaluation gain, will you book it to P&L or RR? So they are saying this asset was revalued previously and how much RR exists? 14. Why have they given this? Why have they given this? Treatment. Sir, impairment loss, you will transfer it to P&L. First impairment loss, you will adjust with RR. Balance only, you will adjust it with P&L if required. So they have given this data. Okay, let's test it out. What are the 2 things we need to calculate impairment loss? Carrying amount, recoverable amount. So carrying amount is 27.3. Recoverable amount is 12 lakh. Is carrying amount greater than recoverable amount? Yes. By how much? So what is that 15.3 lakh? Impairment loss. So that's the first requirement. Find out the impairment loss. What is the treatment? Treatment means what you will do for this impairment loss. Transfer it to RR or P&L. First to what? First to what? RR. Full amount. No. How much RR exists? We have only 14 lakh, means out of 15.3 lakhs of impairment loss, against 14 lakh you'll adjust with RR. Balance is how much? Where it will go? That's it. Okay, G. If you want, we can do it in entry also. You tell me the entry, or it's anyway we discuss this. First entry for impairment loss. First entry. Impairment loss account debit 15.3 lakh. To what? To PP account. First entry. This impairment loss, where and all have you adjusted? Some against RR, some against P&L. What is the entry? You have debited impairment loss. So to transfer, you will credit. What you will debit? RR debit 14. P&L debit 1.3. To impairment loss 15. Don't pass the entry if it is not asked. For understanding purpose, I have brought it in here. In exam, pass the entry only if they have asked. Otherwise, you simply write it in words or things like this. Okay, G. Now, when you book impairment loss, carrying amount will be same or it will reduce. What was the carrying amount of the asset? 27.3. How much impairment loss you booked? 15.3. Check, you have credited PP also by 15.3. So what will happen to the carrying amount? It will be same or it will get revised. How much? 27.3 minus 15.3 if you do. Obviously, you will get 12 lakh. When you book impairment loss, carrying amount, revised carrying amount will always reach what level? Recoverable amount level. So the revised carrying amount will become how much? Okay, G. Sir, if carrying amount changes, residual value changes, life changes, depreciation also will change. Straight line method ka formula, what is that? Carrying amount minus residual value divided by the remaining life we take now. As long as these three are constant, straight line method depreciation also will be same. If any of these three number changes, then depreciation also will change. Here what changed? Carrying amount changed. So can you take old depreciation or recalculate? Recalculate. That's the reason I said formula for straight line method is not original cost. It is because first time when you buy the asset, carrying amount and original cost are same. That is the reason the formula uses original cost. Actually, the formula for straight line method is not original cost. It is carrying amount. So always take this so you'll avoid the mistake. And this is not life. This is remaining life. Now, what is the revised carrying amount? 12 lakh. Now we are calculating depreciation now. Residual value there or 0? They only told in the question salvage value is 0. Divided by life of 10 years or remaining life of 3 years? Divided by the remaining life of 3 years. Do this, depre will become. Good. Sorted. Okay, we still have a little time, so I think maybe we'll take. Okay, maybe I'll do this one first and then see where we land up. Okay, this is first question in our study material also, in our class material also. Again, study material question. One company is there, Ergo. They have given the data on 31st December 20x1. Discount rate is 15%. Because how do you find value in use? Present value of future cash flow plus present value of residual. To find this present value, we need a discount factor, which is given to be 15% here. Here in this problem, we'll have to calculate the value in use and all that. Okay. Now, people, they have given check here. Ergo Industry gives the following estimates of cash flows relating to PP. By using PP, how much cash flow you will generate in the future they have given. So how can you say it is a future? Check which year is this. Currently we are on 31st December 20x1. They have given 20x2, which is next year. Then x3, x4, x5, x6. That means what have they given? They have given the next 5 years ka future cash flows. And standard also says you can take only 5. If you want to take beyond 5, you have to justify. Here, any justification required or take it as it is? Take it as it is. So this is your future cash flows. All the numbers are in lakhs. Can we take this number as it is or multiply by the discount factor? Multiply to get the present value. That is one. Is this the only component for value in use or one more? One more. What is it? Residual value. Residual value, you know. Residual value you will get at the end. What is the ending expected date? 20x6. So that means residual value is 1000 lakh. So how do you find value in use? Simply take all this future cash flows. Do not forget to take the residual value. Many students do that mistake. This is your future cash flows. Yes, sir. Multiply by what? Discount factor. What is a discount factor? 15%. And you know how to find discount factor, no? What is that formula? 1 divided by 1 plus I whole power n. Basically 1 divided by 1.15. All of you are comfortable, no? Must have done a lot of this in AS 19, FM and all that. I hope I don't have to go into that now. Yes, sir. 1 divided by 1.15 you do, you will get this, and go on pressing equals to button in your calculator, you will get the discount factor. Common mistake, after 5th year, students again will press equals to button and say 6th year ka. Don't do it. These two cash flows occurs on the same date. So same discount factor. If you feel you're doing that mistake, then better what you do is last year don't take 4,000. Take 4,000 plus 1,000 and make it as 5,000. Silly mistake. But if value in use is wrong, recoverable amount is wrong, impairment loss is wrong, journal entry is wrong, revised carrying amount is wrong, depreciation is wrong, whole question is wrong, 0 marks. Just one mistake can lead to 0 marks. Instead of getting 6 marks, you literally got 0. And you can't blame the evaluator because every step of yours is. So these are small things you need to be aware of. And you will be aware only when you write some mocks. That I cannot say. I can only tell you what I feel can be done. But your creativity knows no boundaries at all. Yes, no, yes, no. Yeah. All right. So this is the future cash flows. Multiply by the discount factor and you will get what? Present. This is the present value of future cash flows. This is the present value of residual value. Adding these two, what are you going to get? You will get the value in use. This, that depends. Sometimes they take 2, sometimes 3, sometimes 4. Usually we recommend 4. But I say only goes sometimes here and there. So it is, you can just maybe check the latest RTP and take that. Maybe that, but it is okay. Anywhere between 2 to 4 is okay. Right? Yeah. Are we good with this? So value in use we have found out. So far any doubt in this? Okay, let's read the data further. Property, plant and equipment, read this. Property, plant and equipment is purchased on 1120 XX ante. We don't know what is XX now. Yes, no. 1x only is difficult for us to digest. Now, yeah, this 2 means difficult only. How much? 40,000 lakhs. Useful life is how much, sir? 8 years. Net selling price, fortunately, is given directly to be what? 20,000. I mean, recoverable amount straight away we can find. No. How do you get recoverable amount? Value in use, net selling price, you compare and take the lower of the two or higher of the two. Which is the higher of these two? 20,000. That means recoverable amount is straight away 20,000. That is sorted. That is also one other requirement. Hope this is good. The only question mark now is what the hell is this 20XX, what they have given there. We'll see. Requirement is you need to find what is the carrying amount of the asset at the end of 20X1. They have given carrying amount as on 1st January 20XX. We have to first find carrying amount at the end of 20X1. Value in use we have already found. Recoverable amount we have already found. Impairment loss we need to find. To find impairment loss we also need carrying amount. Okay, so they'll give some information. Check. 20XX is immediately preceding year before 20X0. 20XX is immediately preceding which year? 20X0. We are in which year now? 20X1. That means we are in 20X1. Previous year is 20X0. Before this year becomes what? 20XX. That's what they're saying, trying to say. Okay, now people. That means you purchased the asset how many years back? 3 years. 1, 2, 3. We are doing impairment check at the end of current year. No? So current year was also passed. We are at the last day of current year. So 3 years has passed. Are we comfortable with this, everybody? If you want, I'll read this line once again. 20XX is immediately preceding year before 20X0. We are in which year? 20X1. Whenever they tell you information as on 31st December, always assume that we are following calendar year, not April to March. Calendar year. So current year is 20X1. Last year becomes 20X0. Year before previous year is 20XX as information given in the question. So you have used this asset for how many years? 3 years. That's what they've given. On 1st January 20XX, that is 3 years before, how much did you buy the asset for? 40,000. I mean, simply we need to depreciate the asset for how many years? 3 years. Calculate. How do you calculate? Basically, carrying amount. When you buy the asset, original cost and carrying amount are same, which is how much? 40,000 minus residual value. How much is the residual value? 1,000 divided by life. Life is 8 years. Do this. 40,000 minus 1,000 divided by 8. If you do that, you will get depre for how many years? 1 year. We need it for 1 year or 3 years. Multiply by 3. 14,625 is a total depreciation. You bought the asset for 40,000. You have depreciated to this extent. That means after depreciation, what is carrying amount remaining? 25,375. That's all. Okay, Naji. Pakka, Naji. Now, is there any impairment loss? Make me happy. Is there any impairment loss? Carrying amount is this. Recoverable amount is that. Carrying amount, is it greater than recoverable amount? Yes. By how much? So, what is impairment loss? 5,375. If they don't give any information, impairment loss, you will transfer it to P&L. If it is there, RR they will give. If they don't tell, straight away you can transfer it to P&L, or you don't have to write any comments. Leave it at that. Okay, Ji. Sir, after you book impairment loss, carrying amount will be same or it will get revised? Revised. What will be the revised carrying amount? Before impairment loss, it was 25,375. Now asset balance will reduce by 5,375, and obviously it will become what? Recoverable amount, which is 20,000. Done, Ji? Yes, sir, Ji. Sir, they also asked depreciation. Check for which year? 20x2. Why did they not ask for 20x1? Because current year is x1, no? Sir, we are doing impairment check on 31st December 20x1. That is at the current year ending date. When you are at the current year ending date, current year ka depreciation is already accounted. Current year depreciation is already accounted. Again, if you account, it will be double. Hence, they have not asked x1 ka depre, rather they have asked x2 ka. Next year onwards, what will be the depre? It will be same or it will get revised. Why will it get revised? Since carrying amount got revised, depreciation for next year onwards also will get revised. How much? What is the formula? Revised carrying amount, which is 20,000, minus salvage value, which is 0, divided by life or remaining life. When you bought the asset, life was 8 years. How many years has already passed? 3 years has already passed. So the life remaining is only 5. So from next year onwards, you will charge a depreciation of 4,000 per. Or salvage value is there, not 0. No? Oh, here, salvage value is 1,000. Sorry, my bad. It is not 0, it is 1,000. Salvage value is given to be 1,000. So this will be what? 3,800 per annum. That is what they've written here. Manageable. This is one whole question targeting carrying amount and full impairment loss ka calculation. We have maybe 2 more minutes. Can we do one more question? Or enough? Okay, maybe I'll try this. I think this is one of the examination question. No, MTP March 24 question. Okay, let's try this. Simple question. I think it came for 4 marks. 4 to 5 marks you can expect. Okay, last one. Listen up. Last one for this standard. XO purchased PP how many years ago? 4 years ago. How much value? 150. I mean, this is original cost. For impairment loss, we want original cost or current carrying amount? Current carrying amount. It is depreciating the asset at 10% on what method? Straight line method. How many years back have you purchased? 4 years. First, find carrying amount. We'll read the information and calculate the data then and there itself. 150 lakh depreciation is 10%. So for 1 year, how much is depre? 150 lakh into 10%, which is 15. How many years back was the asset purchased? I mean, what will be the total depreciation for 4 years? 60 lakh, correct? You bought the asset for 150 lakh. So far you have depreciated 60. So the carrying amount at year 4 ending is 90 lakh. Till here we have approached. All of you there? Now let's go back and read the data. At the end of 4th year, it has revalued the asset. So this is a revaluation and impairment combo concept. Okay. At the end of 4th year, it has revalued the asset to be 75. That means market value of the asset is how much? 75. Happy or sad face? Sir, you are showing the asset currently at 90 lakh, but the market value of the revalued amount is only 75. So revaluation loss or revaluation gain? Revaluation loss. First time you did revaluation and you got a revaluation loss. How much? 15 lakh. Where it will go? How much? 15 lakh. Correct. And you know the entry also. What is the entry for this? If at all you want to pass the entry? Revaluation loss. So PP you have to reduce by 15 and you will debit what? P&L debit to 15 lakhs. Correct. So due to this entry, PP balance, since you're crediting PP, carrying amount will be same or it will get revised? Revised. What will be the revised carrying amount? The revised carrying amount from 90 lakh, it will reduce by 15 and it will become 75. So far there. Okay, moving further. However, on that date of revaluation, first now revaluation drama is over. On the same day, market price is 67.5 lakh. It's actually a little dicey on what, because revaluation means to show the asset at market value. Here they are saying market value is 75. Here they are saying it is 67.5. Little foolish, but don't question the. They say that's it. He'll accept it. Okay, Naji. Now, okay. On the date of revaluation, market price is 67.5 lakh. Disposal cost is 3 lakh. Disposal cost is 3 lakh. What are they hinting towards? NSP. How do you calculate NSP? Selling price minus selling cost. How much is NSP now? That's what. Because, sir, when will you find NSP? Now, don't be a brospati and tell indicator not given. No, I will not do impairment loss. Sir, the moment they give NSP data and all, question is indirectly asking you to assume that indicator has already come. If indicator has not come, why will you find NSP in the first place? So don't write that kind of weird answers and all. Okay, fine. So don't cross question all of that. Yeah. So just go ahead with that. So to find recoverable amount, we compare two and take the higher of the two. What are those? NSP and value in use. How much is NSP? Market price, selling price minus selling cost. If you do that, you will get 64.5. Value in use, they must have given check here. Value in use is 60 lakh. Given. So what is recoverable amount? Lower of the two or higher of the two? Higher of the two, which is 64.5 lakh. Carrying amount is 75 lakh after revaluation, but the recoverable amount is only 64.5. So is carrying amount greater than recoverable amount? Yes. By how much? By how much? These took a difference. How much? 10.5 lakh. That you will book it as what? Impairment. This impairment loss, you transfer it to RRR. Though you have done revaluation, you have got revaluation gain Allah, you have got revaluation loss. Do you have RR or no RR? So this impairment loss, where it will go? P&L. Maybe if you want, you can write one more line. After you book impairment loss, carrying amount again will get revised. From 75 lakh, it will reduce by 10.5 and directly it will become how much? 64.5. Okay, Ji. Thank you.